Hi guys, welcome back to my channel. Hope you guys are doing really well. If this is your first time here, I'm Lindy Peters and I'm a financial coach. Here to help you plan for a brighter future and help you take more control over your hard-earned pennies with budgeting, saving, motivation and guidance. And I'm also sharing my investment journey with you. So today we will be having a look at ExxonMobil. We'll have a look at the company, I'll have a look at the stocks, and we'll see what the CEO is saying about the dividend. So ExxonMobil is the largest public trading energy provider for chemical manufacturers, develops and applies new generation technology to help safely and responsibly meet the world's growing needs for energy. So what is their mission? They want to be fueling the world safely and responsibly. So if we go and have a look at their environment, now the energy sources they use is natural gases and oil, but they are looking into the future on how they can provide us with fuel for our vehicles, but make it a lot more environmental safe. They are very keen on working for environmental protection with a lot of ideas to help with climate changing and sustainable water and energy. They also have a YouTube website where they work on energy efficiency, how to help us save energy in the home so that we help save the environment. If we have a look at their research, you'll see they've got advanced biofuels that they're working on to make it safer for the environment, and carbon capture for storage, so that they can use that for energy and actually help with cleaning up the environment and the air pollution. They also work with chemicals. Now with these chemicals they help to supply the medical industry. But if you like to find out more about each and every part of this company, you're welcome to come and have a look and have a read through all of these segments. If you're getting value so far, please hit that like button so it turns blue, and make sure you subscribe to the channel so you don't miss out on any of my new videos. ExxonMobil Corporation, ticker symbol XOM. It's currently trading at 33.51. As you can see, it's taken a hit in March with coronavirus like most other stocks. So if we have a look at the dividends, the dividend yield is 10.55%, and it's got an annual payout of $3.48, and it's had a dividend growth for the last 19 years, and it pays out quarterly. Now if we have a look at the dividend history, you will see they've been paying dividends for over 20 years. So if we have a look at the dividend growth, you can see in the last year they've got a 2.96 dividend growth. Over the last 3 years it's a 4.8. Over the last 5 years, it's 4.90%, and over the last 10 years, it's a 7.53% dividend growth. So having a look at the stock valuation, you will see the current price is $32.98. A fair value for this is $55.40. Now you can see that is undervalued by 27.4%. So this is a nice price to buy the stocks at if you believe in the stocks. Now if we go further down and have a look at the balance sheet, you'll see the physical assets is 250 billion, long-term and other assets is 59 billion, the inventory is 19 billion, the receivables is 19 billion, short-term investments is 12 billion. Now if you have a look at the equity and liabilities, you will see the equity is 187 billion, other liabilities is 79 billion, the debt is only 61 billion, and accounts payable is 33 billion. So they do have a good balance sheet to get them through this time. I'll add a video in here of what the CEO says, how they get through these difficult times.
For us as a company, and as we've talked about before, we've got to take a very long-term view. Yeah. And the investment cycles that we make are anywhere from 5 to 10 years. And so our strategy in laying out our plans is to make investments that are robust to these down cycles, and so that you can ride through them. We've got a key competitive advantage with the balance sheet, and so we build these advantage investments, they're robust to the down cycles, and then we use our balance sheet to kind of ride through these turbulent times and make sure we can deliver on those projects that then form a platform for our business to grow earnings and cash flow for the long term.
That makes sense, again, from the projects and the profitability perspective of that, but there have been some numbers run just in terms of paying the dividend. You guys have a very high yield, 5.7%.
Right.
JP Morgan ran something that said they think oil prices would need to be at around $81 a barrel for you to be able to pay out the whole dividend versus, I think, $63 is what they put for the rest of the U.S. group. How do you look at just in terms of shorter term paying the dividend over that period of time?
So I think, we have a balance sheet that allows us to do this. We have a capital allocation priorities, making sure that we invest for the long term so that we have the sustainable growth platform, making sure that we pay a reliable and growing dividend, making sure that we maintain a balance sheet that allows us to ride through those cycles, and then if we've got things, extra cash going into buybacks. And so that balance sheet that we've historically had is built for times like this to ride through it. Frankly, the way we look at it is we're generating enough money to pay our dividends. What we're using a balance sheet for is to make these strategic investments that are advantaged versus the rest of industry and will be required as economies continue to grow and demand picks up.
But to pay the dividend, if oil prices stay low, let's say the economy suffers for a while longer, would you cut back on some of those projects that you've been investing in? Would you buy back fewer shares? How would you do that?
So what we talked to the analysts today about is we've got flexibility. We've got a really robust portfolio of investments, and they have different time cycles associated with them. So some of them we can pull back and defer some of that spending without losing the advantage of the project and without diminishing its value. And so we've already started to do that, to pull back on some investments, recognizing the environment that we're in, without changing the structural improvements that we talked to the analysts about 2 years ago. And today what we told them is we've been delivering on those structural improvements. We're on track to double earnings and cash flow by 2025 compared to when we first rolled this out in 2017. So we're on track with all that, and even with the deferrals that we have put in place, we're still on track to that. We have put together over the last several years an investment portfolio that's the best the company's had since Exxon merged with Mobil. And so it's a really rich opportunity set. And it's an organic investment profile, the program that has very high returns. It's robust in these low price environments. So we've been advancing that. We've got balance sheet capacity. If a unique opportunity was to present itself, we could take advantage of that. But it would have to be pretty attractive to compete with the organic things that we already got in the portfolio.
So having a look at Yahoo Finance, you will see their market cap is 141 billion. The dividend yield is 10.55%. Now that is quite high compared to what it was before March. So they've brought up the dividend yield to make sure that they still pay out the same amount of dividends to their investors. And you can see on the fair value, it's undervalued at the moment. If you have a look at the earnings, you will see they've got 2 bad quarters and 1 great quarter, and they'll be releasing the next quarter this month. If you have a look at their revenue, you'll see their revenue has been growing a lot over the last few years. But if you go down, you'll see for this stock, it's a hold mostly, but it's also a buy from some people and a strong buy. So at the minute, it's at a hold. Now, I like ExxonMobil and what I see in this company and what they are striving for. And this is the current price. That is their average price, and 77 is the high price. So I'll be buying for me 2 shares of this month to help me level out my quarterly dividends so that I can receive the same amount of dividends plus minus every single month, so that I can have like a level throughout the year that I earn every single month. Just a disclaimer, I am not a financial advisor, I'm just a financial coach. So please make sure you always do your own stock research before you invest your money. I'm just sharing my opinion and my investment journey with you, but I'm not a professional investor. I'll leave a link in the description below if you'd like to give me a call to discuss any of the topics in my videos. If you found this video helpful, please give me a thumbs up to let me know, and make sure that you subscribe and ring the bell so you don't miss out on any of my new videos. If you've got any topic requests or any questions for me, please comment below and I'll get back to you personally. Have a lovely day, guys. Bye.